In today's episode, we're talking about Wirecard. Dave, tell us, what do you think about this whole scandal?
Well, Wirecard's an interesting company. It was set up back in around in the early 2000s as a technology company. It had a really interesting background in that a lot of the money that they earned was off sites that nobody else wanted to touch. So, for example, pornography and gambling, and specifically gambling in the United States, which at that stage was outlawed, that you couldn't pay for gambling with your credit card. And so those were mainly run through Ireland in order to show that the processing wasn't for a gambling website. So it had a bit of a dodgy past. In 2008, there was an allegation of fraud by the company, and they employed Ernst & Young to come and do the forensic investigation, which Ernst & Young then did. The investigation turned up nothing of significance, but what is significant, and the optics aren't good here, is that Ernst & Young were then appointed in 2009 as the auditors of Wirecard, where they stayed auditors until the collapse in 2020. In the interim, Wirecard grew substantially, mainly with processing in the Far East and the Middle East, and that was where the majority of their processing fees were evidently coming from. And they were at one time seen as being the new tech giant of the German stock exchange, a company which was well respected, well looked up, and if it hadn't been for some pretty determined investigative journalism, a company that may never have been found out, because at the time that they did go down, they were attempting to buy Deutsche Bank, and if they'd managed that, they may well have been able to hide their fraud within the Deutsche Bank figures.
What made Wirecard the leading finance, the new kid on the block in tech finance?
There was nothing really special about them. They were just doing what other people were already doing, Visa, MasterCard, people like that. They were a processing hub. What they did do was they expanded their markets incredibly quickly and were seen as being this new kid on the block in terms of payment processing worldwide that could actually process transactions quicker, faster, cheaper than the other major players, your Visas and your MasterCards. And that's what made them such such a wonderful company, or on the surface, such a wonderful company, is that they had this veneer about them that showed that they were a successful tech company, that they were challenging the old-fashioned way of doing things, and that they were succeeding. They had a bright leader, and he was even linked to being the next Steve Jobs, complete with turtleneck sweater and speaking at conferences. And then you had Jan Marsalek, who was also a really intelligent young guy who was running as the COO. And and between the two of them, they really did manage to pull the wool over the world's eyes for almost 20 years. So you know that they weren't just run-of-the-mill.
When did suspicion arise? How did that all happen?
Well, Wirecard's always been under suspicion from the time that it started. I mean, as we said right at the beginning, their roots were in porn and in online gambling, both of which are rather shady industries. So looking at that, there was always this fish rotting from its head technology or thought pattern. You know, if they were willing to cross the line into gambling, what else were they willing to do? At various times during their existence, people were looking at them and saying, hang on a second, what's going on here? In 2008, There was an investigation into them. Found nothing. They were cleared. But where there's smoke, there's normally some sort of fire. From then on, people started speaking in corridors about Wirecard. The quiet, you should have a look at this company. And to their credit, the Financial Times, a couple of investigators there, Dan Crum and his colleagues, looked at this and thought, yes, this is worthwhile investigating. And they started to write articles about Wirecard dating back to 2015, saying that the company was basically nothing more than a sham, and that the money and that the financial statements didn't appear to make any sense. And they continued with this, with going forward with the looking at the financials and reporting up until the collapse in 2020.
So you talk about, the Financial Times being a pivotal point in this investigation. Why didn't auditors or regulators pick this up beforehand?
A really interesting question. I mean, the optics on EY are not good. The fraud itself was a fairly simplistic fraud. What they did is every year they needed to increase their profits. And so every year they parked more money offshore in what's called an escrow account, simply an account which is held by another bank on their behalf. And when this started off, it started off small. It was a couple of $1 million, maybe 5 million, $10 million. But each year the amount of money in this escrow account grew. Now, the auditors simply wrote to the escrow account holder and said, do you hold $10 million for Wirecard? To which they got a lovely reply saying, yes, we have $10,400,332 in escrow for Wirecard. And so the auditors went away happy. They did no other work on it. And every year this amount grew and grew and grew until in the final year they were writing and saying, do you have 1.7 billion euros in escrow? We're not talking millions now, we're talking billions. And of course, they got a note back saying, yes, we have 1.7 billion euros in escrow. And they were quite happy to carry on with that. So that's how easily the fraud was hidden away. At no stage did Ernst & Young, it appears, go out and verify that the transactions were being made in the Philippines and Singapore and Dubai, that there was actually even any businesses that were there. When the investigators from Financial Times went, they found the one was a travel agent, the other one was a derelict building. So it wasn't exactly difficult to work out that there was nothing of substance behind this. BaFin, which is the German regulator, instead of reading the warnings, rather tried to prosecute the people who were giving those warnings, because Wirecard was seen as being this wonderful company that could do no wrong. The nicest company in the room in this case. They were growing, they were challenging the Americans in terms of technology. They were the darling of the German stock exchange. And so BaFin, instead of looking at if the complaints were correct, actually tried to prosecute the whistleblowers, saying that they were just doing this to try and get money from shorting the stock, selling stock that they didn't have and waiting for the price to come down and then buying it at a superb profit.
You said something about buildings that didn't exist. How exactly does that work?
It was 1.7 billion euro, which is about $2.4 billion. way it worked was that Wirecard said that the money that they were earning overseas, they weren't repatriating to Germany, but rather putting into an account in Singapore. And they were doing that because it was a more cost-efficient way of parking the funds. Now, there's a whole lot of red flags that are raised with this. What company is able to park away $10 million or $100 million, let alone over $1 billion? This is a bank that's operating. Wirecard had their own banking license in Germany. Why did they not repatriate those funds to use in the mortgage market, to provide mortgages to homeowners, to provide business capital to companies from which they could have then made a large profit? Why did they park it, effectively earning no interest, no capital growth whatsoever, in an account that was sitting so far away? None of it really makes any sense. And this is what the investigation by the Financial Times showed, is that none of it made sense as to why this money was never being repatriated to Germany. The fact is that right at the very end, Ernst & Young only didn't sign off on the last set of financials because KPMG hadn't signed off on an investigation that they'd done, and Ernst & Young just required that 300 million was transferred from the escrow account to Wirecard's account so that they were sure that the funds actually existed. And of course, there were no funds, so the transfer never took place. And that's really where the end game ended. But we'll get onto that later.
I mean, technically, how, as an expert, did they cook these books? Did they work in inflation? What did they do to make these financial statements even make sense?
It was, again, very simplistic. All they did is they recorded more sales than what they'd actually made. Now, if you have sales, it's a credit on the balance sheet, on the trial balance. So you need to have a debit to go somewhere. Very simplistically, if you go out and you buy a car, your bank account goes down by 30,000, your assets go up by 30,000, being the car that you now have in the driveway. The same happens with when you make a sale. You sell something for $1,000, great. On the other side, what happens? You either have an accounts receivable, so somebody owes you that money, or alternatively, it comes in into a bank as cash. In this case, all they did is they raised fictitious invoices saying that they've sold a lot more than what they actually had. And instead of parking it in an accounts receivable account, they decided to park it in a bank account, which was this escrow bank account, which was sitting offshore. And the easiest thing is that Jan Marsalek was probably the person who was running the escrow account. So when the Ernst & Young sent off a confirmation letter to the escrow holder, it was probably their own internal people at Wirecard who were writing back to Ernst & Young and saying, yes, we have these funds. You can't get a more simple fraud. The scary part is how it got so big and how it was allowed to continue for so long.
So there are mysterious circumstances behind the COO going missing. His name was Jan Marsalek. Is there anything that you've got to add to that, or any insights?
No, Jan was an interesting character. He was 20 years old when he joined Wirecard, the new kid on the block. Incredibly personable type of character. Everybody got along with him. He had dealings with a lot of people, but he was also very shady. I mean, it is reported that he tried to bribe Dan McCrum from the Financial Times with over $1 million. In fact, I think it was $10 million to stop writing stories about Wirecard. So he was a shady character. He
Okay.
effectively was probably the one who masterminded the fraud. And when everything came crashing down at the end of it, he went and took refuge in Russia, where we believe he still is today. We believe that he's somewhere in Moscow. But that's nobody really knows where the man is at the moment.
So the search continues. Is he on the FBI's most wanted list? Is this an active investigation? How does this kind of thing work?
Well, he is on a no-fly list, so if he is caught going into any country controlled by Interpol, there is an arrest warrant out for him. But if he just stays put in one country or flies under assumed name, you can always bypass the Interpol regulations.
What does this tell you about corporate governance problems and issues and fraud? How can we mitigate this?
I think the biggest problem with this particular example is that it shows just how easy it is to commit fraud. Everybody thinks that, fraudulent people are these masterminds, these geniuses who manage to steal other people's money without them realizing it. And really, at the end of the day, Wirecard was nothing but a simple fraud. It was a bunch of people who were too greedy, too trusting, too dishonest. It's very hard to tell which, that allowed the fraud to be perpetrated for so long. At one stage, as I say, Wirecard was looking to buy Deutsche Bank, the largest bank in Germany. And the scariest part of that is if they'd succeeded, Deutsche Bank is so big that they could have probably parked the 1.3 billion or 1.7 billion euro loss and made it go away within the books of Deutsche Bank. And so the fact that this all came out is simply because there was an audit done pre-purchase where, sorry, just a second.
Or
There was, so the only reason why this came out is because there was a pre-purchase audit required to be done by an independent auditor, which happened to be KPMG, and KPMG refused to sign off on the financial statements. And that's the whole reason why this came to the fore at the end of the day. Otherwise, in 2025, Wirecard may still have been going and may have actually owned Deutsche Bank by now.
So, with all this being said, Dave, how do you think this has affected the trust of not only investors but also the everyday person, the consumer?
So the consumer puts a lot of reliance on auditing in order for the financial statements to be correct. We have seen so many instances where auditors do not fulfill that responsibility. Whether it be Wirecard in Germany, Steinhoff in South Africa, whether it be Enron or WorldCom in the United States. In fact, you go anywhere in the world and you have a look, and there's always these large frauds that take place. Why? Basically greed. Greed by the management, greed by shareholders, greed by the regulators, greed by the auditors. you name it. Nobody wants to lose $1 million audit. And so to turn around and say, we're not signing off on a large company's audit report, you have to have somebody who is absolutely dead honest to do that. And there's not many companies around that would say, we're willing to lose $1 million in fees by going public, that this company is not doing the right thing. So that in itself has diminished the value of audits. Management is always interesting. A fish rots from the head. And we often see that companies are started by people who are entrepreneurs. They are risk takers. They don't always play by the rules. And this is where the challenge comes as to, with companies like this, how far is that risk profile of the management and how far are they willing to go? Is it just, oh, we want to dive out of an airplane or go drop $100,000 on one horse race in order to get a kick? Or is it, we're willing to bet everything on the stock market to get our share price up and to drive the market that way? You often see stuff like share buybacks and companies where all they're doing is they're purposely putting up the price of the shares. And the questions then get asked, well, is that being done for the company's point, or is it being done to allow management to make money on their share options that were issued earlier? And is it in the best interests of the company? So, you have a look at all of these things, and it comes down to what your management and what the sphere of influence, what their tolerance for risk and what their tolerance for wrongdoing.
What are maybe the points that you can give to a business to protect themselves from this ever happening to them?
Well, the first is good governance. You really do need to make sure that your management team is squeaky clean, that they aren't breaking the rules, that they aren't taking big risks, that they are there for their workers and for the rest of the stakeholders, their customers, their shareholders, and not just there for themselves. It is such a difficult one as to who do you employ. I recently had an engagement where a person was accused of stealing from a company, and what had happened is he'd been appointed by a First Nations in order to run their financials for them. And when he was appointed, they were making kind of $200,000 a year. By the time he was caught, they were earning well in excess of $2 million a year. The only thing is that the person involved had decided he was also taking $2 million. So when you have a look at it, his ethics were low, but he'd done tremendous work in building up the band. And that's where these ethical dilemmas come into play. The same happened with Michael Braun and Jan Marsalek. They went and they managed to build this empire called Wirecard. They took a lot of money of people who came into the stock market when it was brand new, and they turned them into wealthy people. They employed a lot of people. They had a veneer of success. And they were making a lot of good money as well from it. It's only when these houses of cards come crashing down that who actually pays the price at the end of the day. I mean, we see it with Bitcoin, another classic example. Bitcoin continues to rise on a daily basis, trading at over 100, or was trading at over 100,000 US dollars, with no financial backing behind it. It could go to $1 million, it could go to $10 million, but on the other hand, tomorrow it could go to zero. And this is where people really don't understand the games that they're playing in. It's great when the market goes one way, but if it falls off a cliff, it's absolutely awful.